Hey, this is Neil Clements, and this is The Real Deal with Neil. Today, we're going through why banks make the best real estate partners. Everything from rates and terms to relationships to quick approvals and closings. So stay tuned if you want to learn how to get cheaper capital for your real estate investments. So the first thing is rates and terms. When you go to the bank, you're gonna get the best rates, the best terms possible, because if you think about how banks get their money, what they do is they get money from people who deposit at their banks, and they don't pay hardly any interest. Majority of banks, I would probably say, pay zero interest on commercial accounts, and especially bigger sums of money. Even the bigger banks that I know of who pay some kind of interest are at, 1%, 2%, maybe 3%, and yet they're going to lend it back out. And so their cost of capital versus anybody else in the industry, whether that's funders, private investors, their cost of capital is so low that they can pass on those savings to the people who come into their banks to get commercial loans. And so when we look at the rates and terms that we're getting at banks, for my business right now, when we're buying land, most of them will have us do 20 to 25% down. Now with that, they're going to be lending somewhere around prime, prime minus a half or prime plus a half, sometimes prime plus one. The prime rate at the time of this video is 7.5. And so that's gonna make it somewhere between 7 to 8.5% interest. And if you try to touch those terms with hard money, private lenders, funders, gosh, you're gonna pay probably double, including points or anything like that to anybody else. And especially if you're paying equity, like a funding partnership, you're paying a lot more for that money. And so with those rates and terms though, the downside, I guess, is that you have to bring the down payment. But there's several ways to get that down payment. Maybe you can create enough equity and prove to the bank, for instance, that a property you're buying for 200 is worth 400, and maybe their collateral in the property and their risk tolerance allows you to have no down payment at all. We've done that several times. If you can show them what the property is worth in the form of an appraisal. Sometimes you have still the down payment requirement of, say, they want skin in the game, 20 to 25%. Maybe you have a private lender come alongside you at 10 to 12% and fund that down payment for you. Again, still way below anybody else's rates. Or maybe you have some kind of JV partner or some kind of equity partner who does something like that. Or, God forbid, maybe you just have the cash on hand to be able to swing something like that at times. But the other advantage with banks is that you can do interest-only payments. You are gonna have to make payments every month, but the payments are not incredibly substantial. A few $100 to $1,000 a month doesn't hurt. Also, loan time frames. A lot of times you can get away with 12, 18, if not 24-month loan time frames. And so that gives you the time to maximize the investment. That gives you the time to potentially subdivide it and title it, or even just sell it as is. If it's a slow market, then maybe you need some of that time. The point is that you're not gonna run the risk, because most hard money and private money, they want their money back in 90 to 180 days. If you have more time, you run the less risk of them taking your property and you making nothing on it. The last thing is that a lot of lenders are gonna lend on your improvements or your repairs. And so especially if you're able to create a value gap, you're buying it below market value, then you're gonna improve it. A lot of times banks will lend on that. We've had banks give over $100,000 for different kind of entitlement improvements, water line upgrades, electrical upgrades. You name it. All the different dirt work that has to be done. We've had banks give us a lot of money before, as long as they can see that the after repair value of your project is going to substantiate those repairs and that you're going to be able to sell it quickly. And so in short, banks make really, really good partners because the rates and terms are incredible, and they're a 50% discount on probably anything else that you could get from anybody else. And they're very, very easy to go to because banks are in the business of lending money, and they have to lend money in order to make money. So why not go build relationships with them? Number two, your relationships with banks grow over time. And so what I mean by this is, whenever you first go to a bank, they're gonna treat you like an outsider. They don't know you. Flips are relatively risky real estate investments. And truthfully, not all banks love land flips especially. House flips are a lot easier to get funded, but for land flips, they don't really love them. And so once you find the ones that do, you really need to get in tight with them. You need to build a relationship over time, because maybe your first deal, maybe they want a big down payment. Maybe they want 35% down. Maybe they're going to charge you prime plus one. Maybe they're not going to lend on repairs, and maybe they're just kind of trying you out, see what happens. But over the course of doing a handful of loans with them, maybe they are starting to say, okay, we only need 20% down on this one. Maybe we only need 10. Maybe the equity is sufficient to be able to cover your down payment on this one. Okay, we will start lending on repairs. Maybe they'll also start giving you longer loan, time frames. Maybe they'll, I don't know, not have you do monthly payments. The world is your playground once you start building these relationships with banks and you have the trust with them, is my whole point, right? And then additionally, you grow into a bigger relationship where you have such as a line of credit. And so we built several relationships with a few different banks that have given us substantial lines of credits, several $100,000. And with those several $100,000, we're able to go out, we're able to do renovations when we need to, we're able to fund operations and marketing when we need to. We're able to fund properties and close in cash within 3 or 4 days, as long as title's clear, And there are different versions of this. Sometimes banks will give you unsecured $100,000 credit lines just for calling and asking. Most banks will do 25 to 50 just because you call them and said hi. as long as you're somewhat creditworthy. On the other end, you also have new opportunities for securing assets for the purpose of credit lines. So for instance, maybe you have some home equity in a primary residence that you want to now transform into some investment funds that you can do. Secondly, maybe you have some rental properties that from multifamily to single family to whatever you're into. Maybe you can secure some of those rental properties to be able to get some money back. Or third, if you're into seller financing and you have some mortgage notes, maybe you can go collateralize those mortgage notes and either get it back in the form of a line of credit, or you can get it back in the form of a loan. So my point is with this is that there's just so many ways to build a relationship with a bank with the end in mind. Even if you don't intend to use banks for every single deal, if you can build a relationship with them over time, your cost of capital can get significantly lower. You can also get more capital with more flexible terms, and your repayment schedules can be a lot more flexible as well. The third advantage is quick approvals and quick closings. And so once you build a relationship with a bank, what we've been able to do with banks is get loan approvals that can come back to us within 3 to 5 days. So at the time we go under contract on a property, we complete our due diligence, we submit a loan application to the bank, they review the financials, they review our properties, and they come back within 3 to 5 days and essentially tell us yes or no. And these days it's kind of a rare thing to get a no, especially because we know what banks like to do what assets at what price ranges and what areas. And so we pretty much know who to go to for what products, and we know what they like to do and they know what we like to do. And so they give us quick approvals, which gives us certainty in our business. And certainty is something that cannot be overstated with your funding. Gosh, just having the knowledge that I've got several $1 million of relationships with banks, that if I lock up a good property and put it under contract, that I know I'm gonna be able to find the money and I don't have to do a ton of work every single time. I can literally just put my name on a loan app, send over some photos, and get an appraisal done on a property, and they say yes. It makes being bullish to go out and find these properties and to spend so much money on acquisitions and so much time on it, just makes it that much easier. The second thing that you can look at with quick approvals and closings is actually getting what's called a guidance line of credit. And so this is the in-between of a pre-approval, that you would get to buy a piece of land or a house from a bank, a credit line, which is on the far end. In between that, you have what's called a guidance line. And so with a line of credit, that's as like, you email the loan officer or your commercial banker and you say, hey, I need 100 grand on my account. Can you put it in? I need it tomorrow. They say, yes, they put it there for you. A pre-approval is, oh, we've got to approve the property. We've got to approve you as the borrower, send us new financials, appraisals, etc. Right, it's the full underwriting process, typically takes 25 to 30 days to close. The guidance line is in between that, where the borrower itself, me or you, is already approved for a certain amount to spend. So for example, if you had $1 million guidance line of credit, that would mean that the borrower, your entity, is approved to be able to buy properties of loan amounts up to $1 million within this next 12 months or whatever time frame your guidance line of credit has it. You already have pre-negotiated terms, your rates, your down payments, the asset types, the areas, everything is all pre-negotiated, and it's either in writing and signed or it's verbal, and everybody's under the understanding that you can do this. So why do it? What is the advantage? Well, the advantage to the guidance line of credit is that if you take away the borrower approval section from getting a loan from a bank, well, then all they have to do is approve the property. So how do you approve a property? Oh, you just get an appraisal, right? And a lot of banks that I work with do it in-house. And so a lot of times we can pull off 15-day closings. If we really had to, maybe we could pull off a 10-day closing with something like this in place. Because the borrower is already approved, my business is already approved, all that they're doing is approving the property, and they can move really, really fast just to approve a property. And so that's what's such an advantage. I think y'all are seeing that this is the overall theme of this video, is that as you grow a relationship with a bank, things get flexible, things get easier, and money gets easier, which is one of the biggest problems that most flippers deal with, is having consistent money available. So the other thing with banks and quick approvals, as you build a relationship with them, I've even seen banks go as far as issuing a temporary line of credit to be able to close quickly for a property. So if they don't have enough faith in you, or they don't do lines of credits, where I would typically use hard money in a situation where we've got to close in say 5 or 10 days, I've seen banks be open to the scenario where they will buy the property in cash, issue you a temporary line of credit for say 30 days, and then refinance you into a permanent loan as long as you sign some loan documents, as long as they trust you, as long as you've done business in the past. I've seen some banks get pretty darn creative. And so, guys, I just want you to know that banks can be your best partners. They can also be your worst partners. It depends on how you treat them. It depends on if you treat them with respect. It depends on if you grow a relationship, have some deposits there at their bank. But just know, the opportunity is out there for you to be able to grow your relationships with banks, and they make excellent partners if you treat them right and you grow your business through them. So, hope that helped.